Good afternoon. Today is Wednesday, February 12th, 2025. What you are looking at here is TradingView. This is the NASDAQ futures. This position here is paper money. Right now, the TradingView has a paper trading challenge. It's a futures challenge, and it's a really great opportunity for anyone who wants to learn how to trade futures, how they work, how to execute trades on TradingView, etc. I'm leaving this on. So no matter what happens to this trade right now, I'm leaving this sucker on. Just a heads up. Nathan, you are leaving this on. All right. What I want to do today, it is 2:30, so heading into the close here on Wednesday. We had CPI come out, which is on a 5-minute chart, this huge red candle in the NASDAQ. I want to go over a few trade setups. So what exactly happened here? Like what do I see when looking at this chart? And what did I do today to take advantage of this type of price action? Well, let's just state the obvious first. The obvious thing that I see is a huge red bar after the CPI news came out, and then a push right back up, all the way to where the news came out, basically. So huge drop at the open, and the NASDAQ retraced that move. This is ES. ES did not quite retrace the move, but we did move significantly higher from these lows. What else? The Dow did not completely retrace the move, and we're fading here. But, we did make a low here, a nice base, and push higher. Okay. What about small caps? I never really look at small caps. I'm usually on Top Step X, showing my chart on Top Step X. This is TradingView. So let's go ahead and look at RTY while it's here. Same thing, push down and just retracing back to the upside. Okay, how about gold? Let's just look at gold too. Why not? Why not? No real reaction to CPI. Well, I guess there was a slight reaction. I mean, it's right in this area. And we've just been pushing and then flatlined. Okay, so let's go back to the NASDAQ. I want to go over some trade ideas. Let's zoom in here. I am honing in and improving my strategy around the 8-period moving average and a 5-minute chart. Super simple strategy, super simple. And I want to improve my execution within this strategy. Here's some trade ideas from today. And yes, this is all in hindsight, and that's okay. Reviewing the market price action. Reviewing the price action, identifying good trades, looking at how I executed during the morning session, thinking about how I executed versus going back. Yes, the market's still open right now, that's fine. But going back and looking at price and how it moved, identifying trades is a healthy, productive way to become a better trader over time. That's why I'm doing this. So let's go ahead and dive right in. Okay, so again, huge push down in the morning. We form a base right here, but what I'm concerned with is this area right here. All this. Okay? This is what I'm concerned with. What happens within this area? Within this area, first of all, we have a doji, which I don't trade just off doji candles, but I do want to begin becoming more aware of them. Okay, so this candle is a doji. A doji is when the body of the candle is right smack dab in the middle, which means it signals to us that there is not a lopsided group, bears or bulls, that were in charge within this 5-minute time frame. It's a balance. It's a really nice balance of buyers and sellers. And so the opening and the closing price of this candle, the doji candle, is close. It's right in the middle of the range within this 5-minute time frame. So there's that. Now, oftentimes a doji could signal a reversal, and there's strategies, there's traders. A lot of people will see a doji and it's a signal to them that the market could potentially reverse. So there's that. But going back to this area right here, this, I do not like this color at all. Hold on. Let's hold our horses here. Come on. Come on. I do not like that. Let's go like that. Okay. Whatever. That's fine. No, you know what? I want to change this because... Come on. Background. Let's do that. That's what. I know what I'm doing. Okay, this area right here is when price, after this huge down move, this is when price pushes above the 8-period moving average. Now, depending on how far it pushes and what the push above the cross of price, these bars over the 8-period moving average, depending on what this looks like, it could be an opportunity to go long. Well, in this case, it was an opportunity to go long. Sorry for the scrolling there. It was an opportunity to go long. So we see 1, 2, 3 green candles. On the close of this green candle, we can go long and put a stop here at 528-ish. Or if you have more room, put stops at the lows below here. What happens after this candle? Okay, we put our stop here. After this candle, we could go long, and then we can wait for price to just continue pushing, 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 and we trail our stop up. Now, I often say, and I try to often trail my stop just below the 5-minute candles, the swings low. If I do that here, so let's say I go long here and I put my stop here. If I trail the stop and I move this here, let's say here, below this candle, when this candle closes, then I get taken out for a loss right there when this candle comes back in. Now, what I've found is, and what I'm working on improving upon, is that after the first break, oftentimes there will be a retracement. And this retracement candle will get taken out. So you don't want to trail the stop too close. Okay, you really want to let price develop. Now, I will admit, this is a riskier trade because all the markets were down significantly this morning, over 200 points. Okay, the markets were down over 200 points this morning. Because of that, this is a risky trade in the morning. A lot of traders don't trade this in the morning on CPI day. A lot of traders do trade. They like the opportunity, they like the price action. Anyways, it's a risky trade. Because of the huge down move, this could have just continued to fall. It did not. We reversed, we retraced. We already went over that. Let me zoom in again here. So, with this type of price action, We go long here. When this candle closes above the 8-period moving average, okay, we can still trail a stop. But what we want to do is we want to accept this risk first and foremost. So if we go long here when this candle closes at 561 and we put our stop at the low of this candle or just below the low at 529, it's a 40-point stop. It's a 40-point stop. On one mini contract, that's about $800 that we are risking. If, like me, you're in a 50K trading combine or a 50K account, any prop firm with a $2,000 drawdown, that's a risk that if you're willing to take because it's a challenge, like I did today, I do not condone that type of behavior, but I did that. It's a big risk, way too big. It's way too big. Okay. And I'll admit that. I want to be transparent about my behavior and how I trade and how I think about things. So there it is. Now, anyways, if we let price develop in this area, this candle retraced, but it didn't close below the 8-period moving average. Okay, so one way to approach this trade is to let the price develop, meaning let this candle close. We go long, let this candle close where it closes. If this closes below the 8, just get out of the trade. If this takes you out, wipes out your stop loss, then take a step back, let price develop further before potentially re-entering a trade. But with this, you can go long. This candle closes above the 8-period moving average, and then we get this move, zip. Now we can take some risk off the table and move the stop really below this red candle here. You want to move the stop up as really as high as you can, meaning, take risk off the table. So now we have like 43, we have like a 20-point trade. So we cut the risk in half. It's a $400 risk now. Fantastic. Because after this, it's highly probable that price is going to continue up. It's going to continue in this direction. And that's exactly what it did. Okay, so as price moves up, then because we're so, we're far away from the moving average at this point, right? See how far this gap here, this gap, it's a good move on a 5-minute chart. Now we trail, and we get taken out in this area. This is, let's say, 670. Got in at 560. Let's call it 565. Okay. Got out at 670. It's 100 points or so. On one mini contract in the NASDAQ, that's $2,100. Okay, so there's one trade idea. There's several of these today, right? There's several. If we're looking for longs, another idea would be after, right here, right? This candle, huge close above the 8-period moving average. Now, you're taking a big risk, right? Because you got to put a stop below the move, below the swing low here, somewhere around here. There's your stop. If you went through here at 672 and your stop is at 585, that does not work on a $2,000 account. It might work on a 150K account. Either way, it's a huge risk, but it's highly probable that after this move that there's going to be some continuation, and there was. Okay, so that's another trade idea. The next trade idea is same thing right here, right? So look, like you can clearly see here's a low. Here's a higher low. Here's a higher low. So price is moving up. Price is moving up. Okay, let's continue to look for longs. Here's another great long opportunity. We have this like hammer candle. Let me zoom in a little bit. Sorry about all the movement on the screen. Even though not many people are going to see this. Okay, hammer candle to the upside after this move down. 1, 2, this break above, we go long. Stops here or stops here. Trail the stop up, trail the stop up. When price starts going sideways, just get out. Okay, that's another good trade. Shit, this is a good trade. Price closed above the 8, go long. Trail the stop. That's another winner. Now, the real clean price action is this right here. This is about as clean as it gets. Now, this doji is kind of scary. You know, price could reverse off a doji, but it is above the 8-period moving average, right? If we go long here, let's say we go long here, there's a few things that stand out to me. One is this is a base. Okay, so price has support in this area. That's great. That's positive if we're looking for longs. So now, when price breaks above the 8-period moving average here and closes above the 8, we can take our stop. Okay, put it here or put it here. You know, put it here. Close it. Okay, doji, fine. We closed above the 8 still. Nothing to worry about. Trail it. This candle closes. We're going to trail it. Now we're at break even, basically. Trail, 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 trail. You see this candle? Just trail this thing up. Close it. It's another great trade. It's another great trade. So lots of opportunities for trades today, and I just want to review that and cement that in my video journal here, because this is a system and a strategy that I'm trying to hone in on and become better at. And with price acting the way that it is, like it is here, which by the way, for this huge move to the downside and then us to retrace, that's really interesting. I think it's interesting. You know, it shows the resiliency of the NASDAQ. ES not doing as well as the NASDAQ, and the Dow, same thing, you know, not quite as strong as the NASDAQ, but overall, the indices are resilient. They proved that today. So heading into tomorrow, Thursday, there's the PPI, Producer Price Index data point coming out. Today was CPI, Consumer Price Index. It was hotter than expected, which caused this big flush to the downside. What am I going to be looking at heading into tomorrow and Friday? These are all these arrows on here. These are executions. These are my executions as of late. Okay, so what am I going to be looking at? Well, right here, pretty big resistance area. If we continue lower, then I see a few things. This is really simple, right? Simple stuff. High, lower high, lower high, lower high. That's interesting. This is an hourly chart, 1 hour. We are trading above the 8-period moving average, but look at how we're coming in here. You know, anything above the 8, there's you know, probably going to continue to trend higher, but with this resistance area that we just identified, right, all this, We'd have to break above this area now to have any chance of moving higher. For now, this is resistance. And that's that. So today was fun. It's always fun with CPI and PPI and this data coming out around this time each month. Price action is typically there's decent follow through, and there's lots of opportunity. Lots of opportunity. So that is it for this video. Have a great night.